everyone, this is Rob Roy and welcome to the Elliott Wave Options U.S. Market Update. What in the bloody Reddit's going on out there in the markets? I'm sure you've heard all about that by now, so I won't get into it. Let's take a look at the charts. At the time of this recording, it is 1 a.m. on Tuesday night / Wednesday morning, and currently the futures are up a little over 16 points, so slight upside bias. Looking at the chart of the SPY, boy, we just cannot get away from this 381 level. Let's go back and take a look at this zigzag pattern yet again. But it shows you the importance of 100% extension on a C wave of a zigzag. So we ran up, you know the story so far, came up, hit the 381 level, but let's get it up to date, because look where we closed today. Right at 381 again. So since then, we tried to break to the upside, breakout, no follow through, back down, tried to move up again, no follow through, broke to the downside, no follow through to the downside. Then it really looked like on the 29th, okay, now we have something going. We're going to come back down here, test the 61.8% level, which is perfectly normal to test the previous fib level before going to an extended level, but no follow through there either. And here we are right back at that same 381 level that we've been pretty much for the entire month of January. So again, we wait to see whether or not we do get this test or if we're just going to run straight to that 161.8% level. Once we have a break and a follow through, that'll give us the answer. All right, some pretty interesting updates since the last couple of recordings. Let's take a look at Bitcoin. If you remember, after the Bitcoin big run to the upside, it said it needed to calm down, and it did. It came back down the next day. Then we went into a consolidation triangle that we showed in the last week. Really nice Elliott Wave triangle. And now we've, since the last recording, expanded this triangle a bit. And the question becomes, was today a potential breakout attempt? You can see that it tried on the 29th, failed that breakout attempt, came back, regrouped. Now we have another attempt, but the same thing. We have to have a second day, a follow-through or confirmation day to see if we are now ready to run up to that 52,000 level. You can see the wave 4 has been created and labeled right at that 38% fib level, so that could act as a pretty good area of support for that potential run. Or we could correct down and still fill this gap with a lower wave 4. I'm curious as to your thoughts. Post a comment. Where do you think Bitcoin goes from here? Do you think we're ready to run to that wave 5? Or do you think we need a little bit more of a correction first before heading up to that level? Moving on to some of the ideas that I talked about, consideration for your investment funds for 2021. We talked about this ETF for cannabis stocks with the new administration likely to do well. They had also run up. We said they needed to come down towards the 10-day moving average. And look at that. We spent pretty much since the last recording right there at the 10-day moving average. And then we formed a little bit of a descending triangle here with a really nice breakout move today. Same scenario. Do we get the follow through or confirmation day that THCX is ready to move up towards its own wave 5 target? But moving well. In our beginning of the year January effect recording, we talked about one of the aspects of the January effect is that small caps, the Russell, tend to outperform the regular market. Just wanted to update you on that. It did, not by a whole lot. There's the chart of the small cap, and here's the chart of the market. So a little bit of outperformance, nothing too glaring, but we can say that that did hold true for this year. Now looking at the dollar. In the last recording, it's mentioned that a zigzag had qualified right there with a 50% corrective level, which meant we could come up to correct to the 100% level here in this zigzag. Correcting meaning in this wave 4 correction to the upside. Well, we've got a doji today right at the 61.8% extension. So it looks like we're ready to run up and hit that 100% extension level, the C wave of this zigzag pattern. See why I like zigzags so much. Keep an eye out. We've got a new class coming out. I'm going to do a 4-part series on zigzags called Zig-Zag Mastery. So you'll see some information in the not too distant future. All right, now looking at the metals. Silver, part of that whole Reddit mess that we've been talking about, or that I briefly mentioned in the intro. And Sunday night, they came out with a hashtag silver squeeze. And now we're getting out of GameStop and AMC. You're moving into a new realm when you start dealing with the metals. Now you're talking about getting in pools with the Federal Reserve, other central banks. Just kind of had a feeling that this one wasn't going to hold and run like GameStop and some of the others had. But we did have a long position for our subscribers on silver, but expected it to be a bit more of a long-term position. Have one on gold as well. With the fundamentals being ripe for a move higher over time with the metals. But took the opportunity with that big open, because here was the open, 11% to the upside, which is tied for the highest that the SLV had ever opened. So we went ahead and took the position off for our subscribers there and came pretty darn close to hitting the high of the day as we closed back down. And then, boy, I really wasn't expecting such a big move back today, but we did a good job of closing that one out. Gold didn't have quite the same move to the upside here. You can see that it is still, for whatever reason, hovering right at that 175 level as a major point of support and resistance. Yesterday, couldn't break above it, so it fell back down today as silver did. Looking at interest rates, we talked about these triangles that had formed. They've since broken out since the last recording. So here we had this descending triangle, could have drawn it as a symmetrical as well. And already these triangles have followed Elliott Wave triangle rules, meaning that once a triangle breaks out, at some point in time, it comes back to test the breakout point. In other words, it retraces the breakout move. Sometimes it does it rather quickly, as you can see TNX did. Other times it takes a little longer before it retraces the breakout. Same exact thing happened with TYX on the 30-year. So you can see the triangle pattern here. I do think this one looks a little bit more of a symmetrical triangle than TNX did. So there's the breakout, back up, testing it. Now both of these look like maybe they're ready to go ahead and run back to the upside towards that wave 5 high. And then talk about breakouts. We highlighted this triangle in the VIX in the last recording as well, and that's a breakout there. So we had a big move to the upside. Pretty interesting. We had 4 days of elevated volatility, almost identical to what we had back towards the end of October, and then we came back down. Well, we dropped down on the VIX today. Does that mean that after these 4 days we're going to head back down and have a period of lower volatility as well? That could bode for fuel for the market to make its run towards that 420 level. So lots of good updates there. Hit that like button, or better yet, hit subscribe. You'll be notified as soon as one of these recordings come out. Hope you've had a great week. Back to talk to you again soon. Take care, everybody. If you like these recordings, I'd like to invite you to join our new Trade Finder Live, where each and every week we do a live webinar where we talk about the market, but we also go a little more in depth into the technical analysis system that we utilize to forecast where the market's likely going to go, and also to identify trading opportunities. Get your free subscription today. Take care, everybody.